Today I answer the most commonly asked mortgage questions. So stick around, and if you end up liking this video, please consider hitting that like and subscribe button. The first question we get asked all the time is, how long do I have my mortgage for? Well, the traditional term is 30 years. However, you can choose 5, 10, 15. You can choose the term which suits you. It just means your payments are rather large. Do I need to pay a mortgage broker for their service? The short answer is no. However, the long answer is that there are some brokers who will charge for their service. Here at Hunter Galloway, we charge no fee for our service. We get paid by the bank. And the reason the bank pays us is because it means they don't have to pay for marketing, premises, or even staffing. So it allows them to reduce their costs of acquisition and allows a mortgage broker to get paid to help you along your journey. What should I do before applying for a mortgage? Well, there are 3 key things you can do. The first one is get a copy of your credit file. There's many online service providers, and what you want to make sure is that there's no unforeseen issues. So no defaults, no late payments, and no adverse history on your credit file. The second thing you want to do is stop applying for credit cards, personal loans, any credit whatsoever, including Afterpay or ZipPay. This will ensure that you don't have too many inquiries on your credit file, and will also make it more appealing, as the fewer liabilities, the better in the eyes of the bank. And the third thing you want to do is slow down on that career change. Most lenders will want you to be in your role for minimum between 3 and even 6 months. So the fewer changes, the better, and the more lending options will be open to you. What can count towards my deposit? Well, providing you have genuine savings, which is a savings pattern or rental history showing that you've been paying on time every time, then essentially most things can be considered other than more lendings. Let me explain. So let's say you've got shares or an asset like a car. If you sell that, those funds can be considered and can go towards your deposit. However, if you get a personal loan or you cash advance a credit card, most lenders will say this isn't an acceptable form of your deposit. So keep this in mind. If you are looking to take debt out to increase your deposit, in most cases, lenders won't allow this and will consider this an unacceptable form of your deposit. If I'm self-employed or casual, will I be able to get a mortgage? Yes, you will. However, the lenders do require a little bit more information. So if you're self-employed, they'll want 2 full financial years worth of tax returns. And with these tax returns, they'll be looking to take either the lower of the 2 financial years of your income or average the 2. So let's say in 2019, your taxable income was $30,000 and in 2020, it was $60,000. Now, because there's more than a 120% variance between the 2019s and 2020 figures, in most cases, lenders will either use the lower of the 2 or only 120% of the 2, and will mean that sometimes if you're self-employed, it can be a little bit harder to secure money for finance. If you're casual, most lenders these days will need you to be 6 months in your role. And what they'll do is they'll take a look at your year-to-date earnings and they'll annualize it. It's just a fancy way of saying, what will you earn for the remainder of the financial year based on your current track record? So if you're self-employed or casual, yes, there are lending options available, and lenders can make it a little bit difficult and ask for a little bit more information than comparing it to a full-time employee. What is a fixed and a variable home loan? Well, a fixed home loan is a home loan with an interest rate which doesn't change for a period of time. Let's say you get a 3-year fixed rate at 2%. This will mean that for the first 3 years of the loan, your interest rate will be 2%. And it'll allow your repayments not to change and for your interest rate also to remain the same. Whereas with a variable home loan, also known as a floating home loan, it's constantly adjusting to the market. So could be higher or could be lower in the coming years. How much of a deposit do I need? Well, By and large, lenders will need between an 8 and a 10% deposit, plus all the associated costs. These associated costs include stamp duty, your conveyancing fees, and all the other things that pop up like your building and pest and search fees. If you're a first home buyer who doesn't have to pay stamp duty, you really want to aim for an 8% deposit plus a $5,000 buffer, which will allow more than enough money to cover all the associated fees, including your conveyancing, all the bank fees, and all the other things that'll pop up along the way. What are all the fees that pop up along the way when purchasing your home? Well, let's take a real life example to see what these fees are. So let's say you're a first home buyer and you're buying your home in Queensland. Let's say that you've bought for $500,000, which would mean that you're not going to pay stamp duty. So what are all the fees involved when buying a property? The first thing is that there are government fees, and the three primary fees involved is your stamp duty, which is a tax, your transfer fee, which is to put your name on the title, and a registration fee, which is to put the bank's name on the title. Now, these are standard for all states, so whether you're in Queensland, New South Wales, or Victoria, they're all the same, it's just different numbers. So each state has a different figure. So what we can do from here is the next fee that's involved is your bank setup fees. These range from nothing to $1,000 or $1,500, really depending on the bank. For this scenario, I'll just put $1,000 in. Your conveyancer, this is the solicitor or legal person that will be representing your best interest. So they're the ones that'll be completing searches on your behalf, so making sure that they have council approval on all aspects of the property, and will also be helping you settle your home. Typically, this ranges from $1,000 to $2,000, including all the search fees. So I'll just put $2,000 in there for now. And then your other costs. So things like your building and pest, your insurance, and moving costs. Now this varies vastly, but what I'll do is I'll put $1,000 in there, so $500 for your building and pest, and then a $500 buffer for incidentals. Of course, that'll change. Each person will have this slightly different cost. If you're getting removalists and they're having to take a couple of days to help you move all your stuff, well, that could be quite a substantial cost. With an 8% deposit, we'll see here for a $500,000 purchase here in Queensland as a first home buyer, we'll need $45,000. What is a home loan comparison rate? This is a great question. In short, a comparison rate is designed to allow consumers to compare apples with apples. It takes into consideration all costs over the life of the loan. So, for example, if you're on a fixed rate, it not only considers what you're paying in the fixed term, but also what you'd be paying post fixed interest rate. So that if you were to stay with that provider for the life of the loan, what you can expect to pay. And this is what the comparison rate shows. It shows the actual interest rate you'd be paying over the life of the loan. Now, there are a few caveats. In most cases, a comparison rate will compare home loans with a 25-year loan term on a $150,000 home loan. And if you've watched my other videos, you'll know that the lower the loan amount, the more these fees and charges add up and make a difference to the comparison rate. So whilst the comparison rate's a great first step, it's not the gold standard. And you should be very mindful if you are leaning too much on this, that in some cases, comparison rate won't actually give you the full picture. So if you are wanting more information on comparison rates, I'll leave a link in the description of a video I've done recently with all the things you should keep in mind when reviewing and keeping the comparison rate in mind. And there you have it. And if you did end up liking this video, remember to hit that like and subscribe button. Thanks for watching, and remember, here at Hunter Galloway, we get home loans approved. So if you live in Australia and looking for a great mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 088 065. Thanks for watching, and I'll catch you next time.